Did you know that Saudi Arabia's partnership with China could collapse the US economy? The recent shift in allegiance from the US to China could have significant implications for the global energy landscape and distribution of power among the industry's most important players. Stay tuned to find out more. The Crown Prince of Saudi Arabia, Mohammed bin Salman, has recently acknowledged that the United States is now seen as a partner in a new world order. This confirmation presents an opportunity for China and its allies to step up and share the leadership position with Washington. Last week, Saudi Arabia reaffirmed its pledge to China as its top-notch ally and crude oil provider. Additionally, it provided extensive guarantees of its continued backing in various other sectors. It appears that the Saudi Crown Prince presently regards the U.S. as solely a partner for its security concerns, with no substantial payback for Saudi Arabia. The U.S. should not to be amazed that Saudi Arabia sees China as its really financial partner and Russia as its essential accomplice in issues connected with energy. Just recently, there were discussions and deals that were made between two major companies. This happened not excessively lengthy after a far-reaching understanding was endorsed by the Saudi Arabian Oil Company, formerly known as the Saudi Arabian American Oil Company, or Aramco, and the China Petroleum and Chemical Corporation, Sinop. This agreement is seen as a crucial move in China's continuous efforts to establish Saudi Arabia as a state that will regularly purchase its goods and services. According to Yu Balkai, the president of Sinopec, the signing of the MOA represents a new chapter in their partnership with the Kingdom of Saudi Arabia. Together, the two organizations expect to renew and make further headway in the Belt and Road Initiative, BRI, and Saudi Arabia's Vision 2030. Of particular importance to China's long-term objectives in Saudi Arabia is the opportunity for constructing an enormous manufacturing hub in King Salman Energy Park. This project will necessitate a substantial Chinese workforce, not only those involved in the oil, gas, and petrochemicals sectors, but also a sizable security team to protect China's investment in Saudi Arabian territory. In early 2021, Aramco held a 25% stake in the Fujian refinery in South China, which has a capacity of 280,000 barrels a day. This was achieved through a joint venture with Sinopec and ExxonMobil from the United States. In 2018, Aramco also agreed to purchase a 9% stake in China's ZPC refinery, which has a capacity of 800,000 barrels per day from Mongson. However, the pandemic's ongoing effects, Aramco's substantial divided repayment schedule, and both countries' concerns, particularly China's about the United States' response to this clear threat to its long-standing interests and geopolitical relationship with Saudi Arabia, delayed several other joint projects agreed upon in principle between China and Saudi Arabia. In June, Aramco's senior vice president downstream, Muhammad bin Al-Qatani, announced the creation of a one-stop shop provided by his company in China's Shandong. Al-Qatani stated that the current energy crisis is a direct result of fragile international transition plans that have arbitrarily ignored energy security and affordability for all. He added that the world needs clear-eyed thinking on such issues, which is why they highly admire China's 14th five-year plan for prioritizing energy, security, and stability, acknowledging its crucial role in economic development. According to Al-Qatani, the mega project in Shandong involves building stronger ties between Saudi Aramco and the world's largest oil exporter, which would benefit China's energy security. This project is significant because Shandong is home to a large percentage of China's refining capacity, and Saudi Aramco exports crude oil to the region. It is worth focusing on that the case made by Saudi Arabia about their capacity to deliver 13 million barrels of raw petroleum each day isn't completely precise. Presently, the country does not possess the capacity to achieve this production level. As part of the project, Saudi Arabia plans to invest heavily in a large integrated downstream business in collaboration with Chinese partners. In addition, this particular undertaking indicates a change in Saudi Arabia's attention from the United States to China. Despite what they say publicly, senior Saudis are likely to continue supporting China's efforts to challenge the US dollar's dominance in global energy markets. Overall, the mega project in Shandong has significant implications for the global energy landscape and the geopolitical relationships between major players in the industry. Saudi Arabia has taken steps to advance the China-GCC Free Trade Agreement, which aims to build closer strategic cooperation in a region where the United States' dominance is weakening. Additionally, the kingdom is promoting the move away from the United States' hegemony and the global pricing of oil and gas in US dollars. Following China's offer to privately purchase the entire 5% stake in Saudi Aramco that the Saudi Crown Prince (MBS) had originally intended to float but failed to attract Western investors, the then Saudi Vice Minister of Economy and Planning, Mohammed al-Tawadri, announced at the Saudi-China conference in Jeddah that they would be open to considering funding in renminbi and other Chinese products. Saudi Arabia views China as one of the top markets for diversifying funding and will also explore other technical markets to find unique funding opportunities such as private placements, panda bonds, and others. In addition, there have been reports lately that suggest the ongoing negotiations between Saudi Arabia and China have become more intense. The focus of these discussions is for Saudi Arabia to receive payments for some of its oil sales in the Chinese renminbi currency instead of the US dollar. This topic was already brought up in March of last year during the China Development Forum in Beijing. Amin Nasser, the CEO of Aramco, has made it clear that he is dedicated to placing a high importance on China's energy requirements. He has promised to focus on the security of these necessities for the following 5 years, yet for the long haul as well. Apparently, the new change in the faithfulness of Saudi Arabia from the US to China has surprised the US. This move effectively puts an end to the 1945 Corps Agreement that had governed the relationship between the two countries until very recently. The transition has become apparent in a couple of key instances, such as the Saudi Crown Prince, Mohammed bin Salman, MBS, declining a phone call from President Joe Biden. The call was supposed to be a request for MBS's assistance in stabilizing energy prices that were hurting the economy. Additionally, the country has significantly reduced its collective oil production, which has only added to concerns about inflation in the global economy caused by high energy prices. Several senior US officials expressed anger when the Saudi Crown Prince abruptly ended the core 1945 agreement. This was evident in their highly pointed comments at the time of the OPEC cut, including comments from President Biden himself. He mentioned that there would be consequences for how the Saudi Crown Prince ended the agreement. Washington is upset with the situation. Do you think that Russia was helping to maintain oil prices by leading OPEC's 2 million barrel per day collective output cut? Before President Biden commented on this matter, John Kirby, the National Security Council spokesperson, expressed doubts about the future of the US-Saudi security relationship. According to what he said, Biden holds the belief that it's crucial to take a closer look at the relationship between the United States and Saudi Arabia. This is to make sure that it serves the national security interest of the country, especially considering OPEC's recent decision and the role of Saudi Arabia in it. Kirby cautioned that there may be outcomes or repercussions, although he didn't go into detail about what those might entail. The partnership between Saudi Arabia and China in the oil market remains strong, as affirmed by a joint statement from Saudi Energy Minister Prince Abdulaziz bin Salman and Beijing's National Energy Administrator, John Genwa. The two countries have pledged to enhance their collaboration and communication to tackle potential risks and challenges that may arise. It is actually important that, as far as unrefined petroleum, Saudi Arabia has expanded its piece of the pie in China from 16.9% to 17.7% in the January to August period, with shipments of 1.76 million BPD as per Chinese customs data. In addition, last week, the two nations made a commitment to further negotiations on creating shared refining and petrochemical complexes. They also agreed to collaborate on nuclear energy, although Saudi Arabia and China stated that it would be for peaceful purposes. However, just before Christmas of 2021, U.S. intelligence agencies disclosed that Saudi Arabia is producing its ballistic missiles with China's aid. It is normal that the U.S. will keep encountering challenges in the region because of the fortifying of the participation between Saudi Arabia and China. The U.S. of America has long depended on Saudi Arabia as a significant partner in the Middle East. As a result of this move, there will likely be enormous geopolitical repercussions. Considering this new data, the U.S. should give significant ideas to the suitable method for responding, which might include making conciliatory and financial strides to protect its impact nearby. In the meantime, the Saudi-Chinese relationship is expected to expand, which will have repercussions for the competitive landscape of the international energy market and the distribution of power among the industry's most important players. Thanks for watching. As we've seen, the partnership between Saudi Arabia and China in the oil market areas of strength foresees gigantic international repercussions for the US. This alliance could impact the competitive landscape of the international energy market and the distribution of power among the industry's most important players. It will be fascinating to perceive how this creates and how the US responds to this new challenge. Make sure to subscribe for more updates on this developing story, and we'll see you next time.